Guys, stocks are down big today with the NASDAQ currently, as of 1:45 Eastern time as I record this, currently down about 1.9%. A few glimmers of green here. Not even big enough to show the ticker, but look at this. Boeing here, up 0.2%. FedEx, up 0.5%. Some of these smaller companies here showing some gains, but some of the big companies, guys, down pretty substantially. Apple's trying to become the first $4 trillion company. I will get into that shortly. Guys, this year has been a huge year. S&P up over 25%, NASDAQ up over 30%. It's been a big year for stocks, but it doesn't change the fact that valuations are still very high. But there's a lot of enthusiasm for the markets next year. Crypto had a record-breaking year. And now there's a little breather, but it's probably a low volume day because it's a Friday after Christmas. How many people are really trading? This fall right now doesn't have a lot of volume behind it is my guess. So not a lot of momentum to go there. I'm going to show you the Treasury Yields soon, but the big argument as to why stocks are down so much is because Treasury Yields are up. Now remember, Treasury Yields are up. So theoretically, it gives people an opportunity to get a guaranteed rate of return from the government without having to take the risk of equities. But if you remember, back in March of 2022, we had interest rates at 0%. And then they started to raise rates. And the market fell in 2022. And we thought, okay, maybe it's the start of something. And then what happened after that? A massive surge in stock prices. Stocks have far outperformed treasuries in that time period. But for a while there, it was very even. But remember, interest rates, theoretically, if you think about it this way, if all of a sudden I can invest 10 years in the US government and get a 20% return, what return would I have to get from stocks in order to justify buying an equity in order to get that? That's how interest rates work as a gravity for stock prices. Because if I can get a guaranteed return, let's not go as extreme, of 8 or 9% from treasuries, what premium do I need to get to be able to do that with stocks? And based on where stock valuations are today, stocks have to fall precipitously to justify that. I personally believe, and I'll show you guys in other videos, that we are at stock market valuations that are way higher than history. But let's break down some of the news out there right now. The markets for 2024 seem to be entering on a little bit of a whimper. But guys, 2024 was a very strong year. Check out these returns worldwide. S&P, a little bit under 25%. The Nikkei was over 20% return. Europe, a little bit over 6%. Kospi is the Korean market, was down about 10%. Guys, every given year, it's about a 72 or 73% chance that the markets go up. And the average returns are like a plus 20 or a minus 8%. But we've seen a massive bull market. And as I talk about very regularly on this channel, we're sitting at stock market valuations by every reliable metric that are nosebleed and are highest in history, even above the dot-com bubble. We have crypto. Bitcoin has seen $109,000 per coin. Yes, it's down to 95 in about a week, but still very strong performance this year. A lot of major hype stocks absolutely killing it. We're not seeing the crap stocks that make no money like the tattooed chef and the workhorses and all those from 3 years ago, but markets deteriorate from the outside in. Now, some exciting news. Apple may be the first company to have $4 trillion market cap. Will it hold? Well, let's see what people are talking about with Apple. That's very important to understand. Shares are currently trading at 34 times earnings expected over the next 12 months. It's higher than their 5-year average of 26.5. And guys, for 5 years, markets have been overvalued for the last 5 years. With the shares at such a high valuation, investors won't tolerate merely adequate earnings. Guys, when we sit there, and part of our principle-driven investing ideas are to sit there and say, what's likely to happen? What's possible and what's probable? When you have valuations at very high levels, things have to go perfect. And let me ask this question. When have things gone perfect? But you got to remember, we're not here to sit there and say, find the perfect investment. We're here to first say, what are your goals for retirement? Dollar cost average and a low cost ETFs, because here's an interesting stat out here, guys. These are the S&P 500 20-year returns. This is the compounded annual growth rate, including dividends, for the previous 20 years. Guys, 1980, 8.3%. So from 1960 to 1980, the markets with dividends at about 8.3. Now, 1982 and 1978 to 1982 was very, very low valuations. It'd be the equivalent of having the S&P at 1,000 today. Imagine you could buy the S&P 500 at 1,000 today. That's where valuations were back here. So, as I always say, the lower you pay for a dollar of cash flow, the more money you're going to make. So theoretically, what would the 20-year returns be in 98 to 2002? Pretty high, right? Look at this. 98. The previous 20 years did 17.8%. Look at this bracket right here. 16.7, 17.8, 17.9, 15.7. So for this period of time, from 1977 until 1980, look at these returns. And guess what would have happened, guys? Back during those times, people thought stocks were dead. In fact, in August of 82, or July of 82, Barron's had an article where the very front of the Barron's said, the death of equities. Death of equities. Because no one was getting returns on them. And it was the start of the strongest bull market in the history of the US. Why? Because valuations were low. Valuations are very high now. But mark my words, there'll be a time when all the news is going to be bad and stocks are going to be down and they won't recover. And people feel like, oh my God, you can't get a return in stocks. You're getting a return in blah, blah, blah. Go there. And people will exit stocks. And you know what? That'll be the time to start accumulating. And it could take 5 years for that boom market to happen again. And that's what happens here. Because all the news in the late 70s and early 80s were high unemployment, high oil prices, high inflation. It was terrible. That's what has to happen. Stocks aren't bought well when news is good. Stocks are bought well when news and perception is bad. And that's what we try to talk about in this channel. Principle-driven investing, one of the main tenets of it is talking about how the market price in the short run does not dictate if we're right or wrong. And right now, valuations are very high. And I've bought 24 stocks that are up a ton in the last year and a half. I don't care. Why? Because it doesn't seem normal to me. I'm trying to buy great companies at great prices. I want stocks to fall. I want to be able to sit there and pick and choose which stock I want to buy because the valuations are all great. That's hard to find right now. Guys, 10-year Treasury is at 4.577%. Guys, I look at this going, hey, that's pretty good. You get 4.5% return on your money by holding a Treasury for 10 years. Not bad. As rates go up, Treasury prices will fall. As rates go down, Treasury prices go up. So if the Fed continues to drop rates, this will go down. What's interesting is the 2-year Treasury is greater than the 10-year. That's the inverted yield curve. And that inversion has been going on for quite a while. What that means is people perceive more risk in the short run than the long run. Does that mean we're having a soft landing? Well, I put on Twitter recently, and by the way, follow me on Twitter, @EMPaulG. Follow me there because I love doing these kind of things. But I asked everybody, did we avoid a recession? Is this the first soft landing we've ever had? And only 20-some% said yes, and 70-some% said no, there's still more to come. I don't know. I have no idea. What I will say is I do see cracks in consumer spending. I do see these things. Now, holiday sales were great, but there's a lot going on credit cards as well. And the pinch of inflation is still hurting people. Now, I have a great way of helping everybody out with their costs. Join our community. It offers all the tools, all the people out there. Stock Analyzer tool, our most popular software, has been used over 1 million times in the last year, analyzing over 4,600 stocks. It puts the story and the numbers together to give you the price that you need to buy a company. Go to everythingmoney.com, sign up $1 per day for 7 days, $7 for 7 days to try out the software. It'll be the best investment you make. Start the year off right for 2025 by joining our community. So guys, if you're looking at some undervalued stocks to buy, watch our next video. Thank you for your time.